Alright, episode 7. We're going over fair value gap plus risk management, and not everything is a setup. So, fair value gaps. If you're more advanced, you probably know what these are. But if you're not, well, let's take a dive back into when I first started talking about the algorithm. The algorithm, it goes up and down, right? And to take orders, or to make orders, it must, or to take orders, it must make orders, and then it's got to take orders to take orders. So if it goes here, boom, then it goes here. Well, you're probably like, well, how can I determine that it's going to go here and not keep going up? Well, that's where gaps in price comes in. So most likely there's gaps in price within here, right? But there's usually, on this big move up, there's going to be a gap in price. And I'll show you what it looks like. But essentially, these gaps in price will tell you if it's going to bounce off and keep going higher, or if it's just going to keep going lower, okay? These gaps in price are very useful. We will get into the other side of things tomorrow. But today we're just going to keep it basic. What is the gap in price? What is the general understanding of it? So on and so forth. Well, essentially, the gap in price is, we're going to draw it out for you guys. Make this all fancy. Okay. The gap in price is essentially when we have 3 candles. So give me 1 second here. Now again, this can be vice versa. So we have 1. Oh. 2. And we have 3. And what the hell? Alright, boys, so wait, I don't like how this is like that. I don't know why, I just can't see it, but nice. I don't know what's wrong with my trading view. Why is it doing this? Okay, well, either way, boom. We have 3 candles, right? When you guys are looking at these candles, I want you to just try and figure out what is it that I'm going to show you guys here. If you can figure this out, you're already off to the right start. But I want you guys to try and figure out, just looking at these candles, what do you see within these candles? If there's anything you see at all. The gap between the wicks. Hey, there we go. Yep, right here. Okay, I don't know. Hold on. Let me close my trading view and come back. It's pissing me off. You got it spot on, though. It is the gaps between the wicks. So for people who are like, I don't really see it, what is he talking about? You see how this wick right here, there's the only thing that's overlapping is this candle here, and then there's this wick here. That would be the gap in price, because you have 1 candle, 2 candles, 3 candles. When you have 3 candles that are going up or down, depending on what they are, they make gaps in price. So how do you use this? Well, essentially, the understanding of a fair value gap is that price, say if we are in the situation where we already swept out liquidity down here, we kind of did something like this, right, and we have a target up here. I want to see this gap get respected and then keep pushing higher to take out this area of liquidity. So how can you use it in your trading? Well, exactly as I explained, right? How can we use it here? Well, obviously the 30 seconds is not going to be your best friend when it comes to these. It is very helpful when finding your entry, but the best ones are usually on the 5 minutes to 15 minutes. So what do you guys see here? I have an indicator for it. If you're a beginner, I recommend definitely getting an indicator, but you have to understand them first. But having an indicator will just start showing you where these gaps are, but I'm going to go ahead and turn it off here so you guys can really understand it. As you guys see, 9:30 was just a chop session. We didn't really get anything too good. You guys can't see anything. Oh, sorry. As you guys can see, 9:30, kind of just a chop session. Really wasn't much going on here. Gaps weren't being respected. We were just chopping around, going all sorts of places. It really wasn't the best examples, but the better examples, let's see. I'm gonna find you guys a good example. Okay, this would be a good one. All right, look at this trend up, right? Can you guys spot the gap in price within here? In this range, below this range, can you spot the gap within here? Just tell me if I'm getting hot or cold. Hot, 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 correct, yep. So the gap right here, look at this. So if we draw this out, as you see, 1 candle, 2 candles, 3 candles, that makes up our gap in price, as you see there, right? How does price react off this? Well, look at this, right? It doesn't go exactly to the next high because we've already kind of swept things out. But look how price reacts, right? We make this gap off this big move up. What do we get? The price comes straight into it, rejects again, and moves straight up. So you could have been targeting something like that. Let me go ahead and clear this up for you guys. If you were targeting, let's say, for example, you want to target this high, or maybe even this high, right? You could eventually say, okay, there's a nice gap here. If this gap gets disrespected, meaning price just goes through, which we'll go over tomorrow, okay, I will assume we maybe go this low or maybe even this low. But if the gap gets respected and we bounce off of it with some momentum, I can assume we'll come to this high, or possibly even this high. What do we see that price does? It bounces off, tries to go that high, then bounces again, giving us good momentum, and we take out this high and this high for a nice little trade. Another example of that would be, let's see. This would be a good one, but nothing really taps into it. 5 minutes is a little more difficult just because there's there's a lot of gaps to get formed. Okay, perfect. This one would be a good one. So, actually, no, I don't like that one. I do use the inverses a lot more, but we'll get in that tomorrow. Those are called FVGs. So let's say in this point right here, you want to see the price go lower. So now a gap can be formed through anything, right? It doesn't have to be 3 of the same color. It can just be 3 candles that leave a gap in price. So what do we have here? Well, we've created a gap in price. So what would you assume from here? Well, if we go through it, maybe take out this high, but if we respect it, we'll probably take out this low. Let's see what happens. Okay, boom, we're in the gap. Let's see what happens after that. Okay, we're respecting the gap, and boom, as you see, we come out and take this low. Okay, so those are how gaps and prices work. I've always been confused as if it needs to be the same kind. No. So a gap can be formed with 2 and 1 of the opposite color. It can be formed with 3 of the same color. It can be formed with 3 and 1, or 2 and 1, 1 and 2, whatever it may be. As long as the gap is formed, that's all that matters. It doesn't matter what color it is. It just matters that if 3 candles leave a gap in price, that gap is going to be reacted by in some way or another. Now obviously the best ones are the example I showed you guys of before, where they're all the same color, and we're kind of just doing something like this. We're just going up, create a gap, boom, boom, create a gap, boom, boom, right? Those are the best examples, okay? But those are the best ones, but obviously the other ones work just as well because it's the same concept. It is the concept that price does a couple things. It creates orders, takes orders, leaves a gap in price, and then from here there's literally only 2 directions it can go. It can either reject and keep pushing higher, or it can go straight through the gap and it will take out all the other orders, and then from there it'll make another gap and we can do the same exact process. It can come into the gap, go lower, or it can go through the gap, go higher, and then keep doing the same exact process over and over and over, and that is how the price moves at all times. And that's how then you use it in your trading, is essentially, okay, if we have a gap, there's only 2 things it can do. Literally, that's the best part about it. It is obviously the market, there's always 2 ways it can go, but the best part about the gaps is there's only literally 2 scenarios that can happen from this. It either taps into it and goes higher, or it rejects it and we keep going lower, and you can use that gap as a point of entry for you to catch some nice trades and really add another confluence to your trading. Off of what I've just taught you alone right there, and how orders get taken and taken over and over, that's how you can literally, just based off of that, you can be a great trader. And that's simply, mainly the main things I use is simply just gaps and prices or orders being taken over and over to then take more orders, and that's exactly what I do on a daily basis and what I look for. So now let's bleed that into why not every gap is a setup, right? So as I said, I'm on the 5 minute, but let's go on down to the 1 minute. There are so many gaps on the 1 minute. Like there's a gap. I could literally, let's just turn on the indicator and see how many gaps pops up. Okay, boom, we have one here, and then there's thousands of other ones that are within this range as well that just aren't coming up. Like literally just within this range alone, we have a gap. We have a gap right here. We have a gap right here. We have a gap right here. Gap right here. Literally just thousands of gaps get formed on the 1 minute. So that's why I say go to the 5 minute, go to the 15 minute, and find the stronger gaps. Even on the 15 minute, look how many gaps we have. Look at that. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you're probably like, okay, well, how do I find the one gap to really use? Like, how do I really look for one? Well, this is a perfect example. Look at this gap right here. Right? Okay, so if you have kind of a big leg happening, right? When you get a leg like this where there's multiple gaps within the leg, that's usually not what you want. You want just one leg that has one gap that's going to be a strong reactor. So look at what we have here. We have 15-minute equal lows, which we'll get into another day. But as you see, just price, we have lows at the same exact spot. Okay, right? And then we have a high up here. This is the perfect example of what I was talking about before. So look what we've already done. We've taken out orders here, and we have these orders resting up here, and orders resting up here. So from this point in time, if you're looking to take a trade, there's only two things that we can do in this scenario. We can either reject this gap, push lower, or we can go through this gap, take out these orders, and then maybe react off this gap, maybe go down again and go up. Those are literally the only two things that can happen. So if you're reacting to price, well, let's just see how price wants to play out in this gap. Okay, that would tell me, okay, we still have the chance of going up, but from here, I would assume we might go lower. Okay, from there, I would say price is rejecting this gap. This looks good. If you want to take a short here, you possibly could, but obviously I would dive way deeper down into the 30-second or 1 minute time frame to really find what you're looking for. But let's see then how price keeps going off of this. Okay, from here, it's definitely obvious. We're definitely probably going to take out these lows. And then, boom, another gap gets formed. Look what happens here. Gap is formed here, and gap is formed here. We'll get into this later, but if you see two gaps and it rejects both of the gaps, that's a very high confidence trade that we're probably going to push lower. And what do we get? Boom, within that next candle, we push lower and take out those lows. Now, obviously, right here, if we went back one candle, this is the 15-minute time frame again. We could have just gone here, taken out these lows, and then pushed all the way through the gap, taking out this high, and then pushed lower, right? That's just kind of what comes with experience, and that comes with you determining your probabilities within your trade. So that's why then I want to get deeper into why not every gap is a setup. Not every single one, like literally just within this range alone, we have 1, 2, 3, 4, 5, 6. We have 6 gaps that you could be like, okay, this could be a setup. And you kind of just have to, it will come with time, but you have to understand which gaps are the most valid and which ones are going to have the most like force to them, which ones are really going to mean something. And out of all these gaps, in my opinion, the best gap looks like this one. This one looks like the biggest gap, the most. It's just one of the gaps that's only within its own range. As you see, this one within this range, there's 2 gaps. Within this range, there's 2 gaps. Within this range, this doesn't count, but there's one gap here that's quite larger than the other ones and has real like significance. Like things are actually happening with this gap. As soon as it gets tapped in, it's rejecting, and things are actually being used. When I first learned about fair value gaps, I would be on the 1 minute chart, I would watch price go up and down, and be like, oh, fair value gap. Okay, as soon as it rejects, I'm going in. But that's when you have to go deeper into the time frames, right? You cannot just assume a 1 minute gap is going to tell the story. That's why I say the 5 and 15 minutes are going to be your best friend. That's why I always have the 5 and 15 minute pulled up on my screen. As you guys see here, I always have these pulled up on my screen. So right now, if I was looking to make a trade or look for something, I wouldn't really trade anything. Maybe, okay, we have a gap that could possibly form here within the next 6 minutes. But besides that, I don't see anything that's like convicting me to come in and really be like, okay, there's a strong gap here, I want to take a trade. You need to wait for something to open up that's going to be really valid and actually help you in your trading, right? You can't just be like, okay, I'm on the 1 minute chart, oh my god, there's a gap right here, as soon as this taps in, I'm going to take a trade, because that's not enough to really make that trade feasible, right? Because yes, there could be a 1 minute gap here, but let's go to the 1 hour. Okay, boom, there's a 1 hour gap all the way up here. So like, if like, you can't just say because there's a 1 minute gap here and we bounce off it, we're going to tap into this other 1 hour gap, right? Or maybe there's a 4 hour gap, right? there's a 4-hour gap, let's say for example here, you can't just say because there's a 1 minute gap here that the whole 4-hour candle is going to push higher just because of that 1 minute gap. No, you need to align your time frames. Remember I talked about aligning the 5 minute with the 15 minute and the 4-hour and the 1 minute, so on and so forth. Same thing goes with the gaps. You need to understand that there's a lot deeper than the smaller time frame. That's why people always say like trading's gambling, this and that. But when you actually understand all the time frames for what they are and align them properly, you can be a really good trader just because you know that, okay, the 1 minute, yes, it's gonna, once I find, like, okay, if I find the 4-hour bias and I find the 1-hour bias and I find the daily bias, then all I have to do is keep trickling down in time frames. And let's say, for example, right, in the next hour, price comes into this, right? Comes about halfway. We'll go over that later, but price comes into the gap and we start trickling out of the gap. Okay, I can assume, okay, the 4-hour looks good. I think we're going to reject off this gap. Now let's come down to the 1-hour. Okay, if the 1-hour, if we then have a gap here, right, as it was made, and it starts disrespecting that gap, okay, that tells me the 1-hour probably wants to push through that gap because we're rejecting off the 4-hour. So let me come into the 1 minute. Okay, now if the 1 minute is looking like, oh, okay, well, it's going to be kind of a pain in the butt. But now if the 1 minute is pushing through that 1-hour gap, and then the 5 minute, you know, maybe there's a gap within here on the 5 minute and we're rejecting that 5 minute gap and we're pushing lower, then I come all the way down to the 1 minute and I'm like, okay, I can look for a setup. If we then get another gap here and we're rejecting on the 1 minute, boom, I can take a trade right there because all the time frames align. We have a 4-hour rejecting off the 4-hour gap, the 1-hour is disrespecting the gap, 5 minute is respecting the gap, and the 1 minute is respecting the gap. That's giving me what, like 5 confluences. You can even add then another 15-minute confluence and be like, okay, all the gaps are aligning. I'm looking for what exactly I'm looking for, and I think I'm ready to take my trade based on all the other time frames doing what I want it to do and respecting those gaps or disrespecting those gaps and moving forward with the trade. I do want to show you guys one thing. This will maybe kind of help your understanding of like, okay, well, how do I take trades off of this? You guys can look at my screen here. This is, if you go to Bootcamp V1, again, we'll talk about the disrespecting of gaps later, but if you guys look at my screen, this is a whole playbook on how to use these fair value gaps, right? We haven't gone over CICs yet, we haven't gone over IFVGs yet, but just the fair value gaps. Fair value gap stands for FVG, or FVG stands for fair value gaps, and look how you can use them. This is the main example that we're going over, right? You just want to see gaps get made, price reject off the gaps, make another gap, price rejects, and that is a good confluence that we're probably going to push higher, and you can keep going, right? But again, these are kind of like a sneak peek of like gaps being disrespected, but also respecting gaps, so that's a good sign, so on and so forth. Those are all things that you can use in your trading, and I highly recommend when you start learning about these gaps, you start having that pulled up on your screen so you can understand how to use the gaps, when to use the gaps, and just the best way to go about all these things that I am teaching. But with that being said, do you guys have questions on the gaps? Do you guys, like, what else do you guys want to know about these gaps? Gap between the first and third candle wicks. Screen share not up, can't see anything. Oh wait, that was later. I've always been confused as, oh wait, that was all from this earlier. But do you guys have any questions on these gaps so far, and like how to use them, so on and so forth? I think it's a very basic concept. Just as of right now, all you need to know is that when we consolidate and make a big move, we're most likely going to have a gap within that move, and all you need to know is that these gaps should get respected and we should keep pushing up, and that'll tell you if we're going to keep going higher, or if the gap gets disrespected, then most likely we're going to go lower. And that is all you need to know as of now. So I would ask you guys, if you guys are on a computer or even if you're on your phone, go and find an example of a gap in your phone, or if you're on your computer, take a screenshot and send it into the chat right now. I want to see you guys like actually go find a gap and send me a gap that you think would be a good gap. Like for example, this would be a great example if you're on the phone. I mean, this is the 1 minute, but let's go to the 15 minute. Or actually, like, you go literally whatever time frame you want. The 1 hour looks like the best example right now. This is a perfect gap, just because it's kind of, although there's a second gap here, you want the bigger gap. These small gaps, yes, they work, but the gaps that kind of are like 2 finger lengths, like if like you put your finger up to the screen, they're like 2 finger lengths. That is a good gap. That's what you want to see. As you see here, this is another good one. It literally did exactly as I'm talking about, right? It came into the gap, respected it, and we pushed lower really fast. Same thing here. What do we get? As soon as the gap comes in, we push back lower and take out these orders. We will be going over inverse gaps tomorrow. Just for now, so I don't information overload you guys, I just want to go over just what these gaps are, and how they're used and how you should be looking at them. And then tomorrow we'll be going over IFVGs. No, don't worry about it. Because again, if you're a super basic guy, you've never learned about gaps, you need to understand the actual foundation of these gaps, why they work, how they work, and just the very basics. But if you guys could do me the favor, go find me a gap on whatever time frame you want. It could be literally the weekly time frame, whatever it may be. Find me a gap that you think is super valid, whether it's already been taken, whether it's being formed right now, anything. Send me something and I will take a look. All right, Will with the first entry. Yep, beautiful. That is a beautiful gap. Look how that. I literally told Big Racks J, he's one of my one-on-one students right now, right? I want you guys to mold this quote into your head. Wicks do the damage, the bodies tell the story. So if you guys are looking at my screen right now, look what we have right here. We have the 4-hour gap gets formed. What does the damage? Well, the wick. The wick comes into the gap. The body doesn't close within the gap. And what do we get? The wick comes in. People maybe think, oh, we're going higher, just because if a wick is made, that means the body was up there at one point. So people are coming in thinking we're going higher, but in reality, the body's due to damage. We absolutely skyrocket all the way back down, taking out these lows, and we keep pushing down just due to that gap getting respected and us moving through. But now that we've taken out those lows, what do you guys see forming right now? Well, we've taken out the lows. Orders have been taken. Now what's next? It's now time to take out more orders before we do anything else. Okay, Scott with a beautiful gap. Yep, that's a perfect example. Beautiful gap right there. Perfect 3-candle gap. As you see, gap gets respected, pushes higher, and takes out whatever levels he had up there. Perfect example. And again, these gaps form on the 1 second. They form on the 30 second, the 45 second. I've never even used the 45 second, but I'm sure they're there. It forms on the 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, 6 minute, 15 minute, 30 minute, 45 minute, at 1 hour, 2 hour, 3 hour. They literally form on every single time frame at all times. ES 15-minute gap. Let's take a look. Yep, beautiful. Look how price reacts and just pushes higher, right? This is from a bigger move, right? We took out orders, we moved lower, and then we started pushing higher, making a bigger move. Gap gets made, and we literally tap into that gap once, and it never returns, going straight up from there. It's a perfect example. Those are all perfect examples. That's exactly, I'm glad you guys can already find them. I remember when I watched ICT for the first time and he was talking about these gaps. I mean, it literally just opened up my eyes. It was like I opened up my third eye. Like all I saw was gaps now. But instead of having someone tell me that not every gap is going to be a valid gap, I would just be entering on every gap and anything possible, and it would just screw myself until I realized later on that, okay, not every gap is valid, but most of them do play out pretty nicely. And boom, that's another perfect example. Big Racks. You get a perfect gap, respects, and it goes lower. I think that's the same example as Will, but you guys are seeing the same thing, and that's exactly what I want you guys to see. That's perfect. Do you guys have any questions on the gaps, or any other questions related to that? If not, I'm going to talk about risk management. And kind of just the mindset you need to have to sustain accounts and not like blow them within a day just because you've lost. If you guys don't have any questions, all right, I'll move on to, this is going to be like a psychology lesson and then also risk management. So as you guys know, I risk about 500 per trade. 500 per trade might be a lot to you, might be little, just depending on who you are as a trader. But, I mean, 500 I think is right in the middle of the pack. It's not risking too much, but it's also risking just a good bit, right? So, with Apex, if you lose 2,500, you lose the account. As you guys know, I've been on a little bit of a drought, right? I've been losing a good bit, still go break even, but I would not going as break even as much as I would, right? I wish there was more break even trades in there, but I've lost 4 trades without winning a single trade recently. To some people, that might sound really bad. I mean, even to me, I hate losing. Losing is literally losing in any aspect of life, whether it's trading or just anything, pisses me off, to be quite frank. But you can't let it get to you that hard, right? So if I've lost 4 trades straight, any one of those days that I lost, I could have had the mentality like, shoot, I just lost, I need to make the money back. Shoot, I did this, I need to do this, right? But now I've gone a whole week where I just lost everything, right? But I still have one more opportunity. Tomorrow, if I lose, boohoo, I lose, then those Apex accounts. It is what it is. I'm not worried about it, right? But since I haven't tilted, I haven't screwed myself over, I now have another opportunity to go at the market tomorrow. Versus a lot of you guys, and I've been there in the beginning of my trading, where I take maybe one loss and I'm like, all right, you know what? It's whatever. I'll move on to the next day. I take a second loss and I'm like, shoot, that kind of sucked, but I'm going to try and make it to the next day. By the third day, I take a loss, and now my account's gone because then I took 3 more trades that day, all that were losing trades because my psychology was bad, and it kind of just absolutely screwed me. So I think one of the best attributes of myself when it comes to trading is honestly just understanding that you have to make it to the next day. You have to make it to that next opportunity. For example, I talked about this earlier on in the boot camp, but if I blew all my accounts, or like if I blew them maybe yesterday or today, or if I blew them on Friday or whatever day it may be, right, I would be then screwed, right? I gotta then wait a whole nother couple days or day to then get back funded and try again. But instead, I kept my cool and I understood, okay, this is just a little bit of a drought, but I'm still gonna hold on to these accounts and push through and try and make it to the next day. So now thinking about this, right? If I've lost 4 trades in a row, yeah, it sucks. I obviously don't want to be there. But if I win Tuesday, Wednesday, Thursday, Friday, which is very doable, then literally, because I mean, if I'm risking 500 to make 750, if I lose, like, it is what it is. But if I make 750 for 4 days straight, I'm going to be at a better position than when I was. But when I started this whole losing streak, I'll literally be up. Even though I've lost 4 trades straight, I'll be up on the whole week or whole month just because I didn't let my I didn't let my mindset get to me, and I know that if I keep going, I will eventually be up. I just cannot lose that account. And that's how a lot of you guys have to think. I know a lot of you guys think these fundeds, they're not real money. Like, yeah, it's $100 that you throw in, but you need to think about it as your real account. Because the whole goal of being a trader, right, is to eventually get that live account where you have your own money in there, you have good funds in there, and you're going at it with real money. And that's how you have to think about these fundeds, right? At any moment in my funded journey, right, I could have just blown the account, but like, it is what it is. I'll buy some new accounts. But if you can hold on to it, like how you think about like real money, if it was your real money, you wouldn't take a losing trade. And maybe you would, depending on who you are, but you wouldn't take a losing trade and then be like, all right, yeah, you know what, I'm just going to go all in with the rest of the money I have. And then now your account's gone, right? If you think about it like real money, you're kind of going to throw that mindset away. Like, you need to think about it as, okay, I need to preserve this money. I need to make it last as long as I can so I can get out of this slump and keep moving forward. If you guys were with me in the summer, I had a really good summer. Truly up to until I moved into this new house, I had a really good run. I kept getting more funding. I was getting paid out consistently. It was a very good run. I had a lot of winning trades over the summer. It was a really good time, right? And I was talking to my girlfriend about this. She was talking about how her brother sometimes has slumps in her game, right? And if you play sports, or if you play whatever it may be that you play, you're gonna have slumps in everything you do. And unfortunately, I'm in one of those slumps. It sucks, right? But you have to understand there is light at the end of the tunnel. If you can just actually persevere and go through that slump without letting it get to you, without fucking yourself over, without doing all this, then you can go through that slump and it won't mean anything, right? I say life is literally just like a chart. You have your ups, and then boom, maybe some event happens, whether it be with your family, maybe it would be health-wise or whatever it may be, and now realistically you think you're at an all-time low. You think you just crashed and you're like, bro, fuck. But realistically, through this stretch that you had, you've already improved. You've been a lot better, and all this is this little event in your life. All it is you just taking a little low. You're going down a little bit, but you know what? There's only 2 routes that you can go. It's just like a chart. You can either stay in this slump, have a bad mindset, completely screw yourself over, and now you're going even lower than you need to be. Or if you have a good mindset and you understand, okay, this is just a slump, but I can get out of this and things will be even better, what are you going to do? You're going to keep going higher until you reach your next slump, where then you're going to have that same opportunity to decide, okay, do I want to stay in this slump? Do I want to keep having a bad mentality? Or what do I want to do? Persevere, push through, and make a new high and keep going. That is literally how life is. And a lot of people, they get stuck in this. They get stuck in this and they just sit here. They just let price consolidate. They just let themselves get stuck in this whole mentality that they can't go anywhere. They're stuck this and that. Versus the 1% will be like, yeah, you know what? Yeah, it sucks. For example, I'm losing. It is what it is, right? But I know in the long term, my chart is going to look like this. and it's just going to keep pushing higher to new highs, and I'm going to keep learning from these slumps, and I'm going to keep coming out of them. I'm never going to sit in this slump and be like, bro, yeah, this sucks, I can't trade, this hurts, bro, like I'm a bad trader, this and that. No, I know what I can do, I know my talent, and I just have to literally just eat this. I just have to eat this low, and I just have to move forward with this low and keep pushing higher. I already told myself at the beginning of this week, this is going to be my best trading week ever. As you guys saw, I think it was just a test. I took my first loss this week to start the week, and I swear it's just a test. I don't think it's anything serious. I think I can genuinely, I am back against the wall. If I lose one more trade, all those accounts are gone. That'll be 12 accounts gone, and it is what it is, right? I just got 2 more alpha funded accounts just in case, you never don't want to be funded, so I did that today. But like, it is what it is. Like, I know if my back's against the wall, I can perform very well, and that's in the position that I'm at now, right? I know, okay, I've got one more trade. It is what it is. I'm not going to just go gamble that trade. I'm not just going to throw it away. I'm going to really try and get these accounts back up, and you guys are going to be with me for the journey. You guys are going to watch it all. Obviously, if I lose tomorrow, it is what it is, right? You guys have already heard me say that. I don't care. I'll move on, get more funded accounts, and push forward, and just learn from this whole slump, learn from this lesson, and move forward and make a new high. But if I can come out of this, I mean, the fulfillment and just the overall understanding that I can get out of these slumps is then going to build me to another newer high that I can learn from, build from, and keep pushing higher in my life chart. And that's how a lot of you guys should think as well. It's not over when you lose one trade. It's not over when you lose 2 trades. You guys are going to see the person you're learning from who's lost 4 trades in a row. Obviously, I've had break-evens in between. We've seen me literally, I'm on the edge of blowing my accounts, but I'm not letting that stop me. I'm going to keep pushing forward. I'm going to get out of this slump, and I'm going to do whatever I can to push through. And on the other side of the story, if I don't, it is what it is. Like, I don't care about it. It literally is just what it is, and I keep moving forward because my mentality isn't that, okay, I'm going to lose these. Like, this is 2 mentalities you can have, literally just as I said, right? Oh, I'm going to lose these accounts. Shoot, I'm going to maybe change my model or this and that. Or it's, okay, I'm going to lose these accounts, and I'm going to push higher, get even more funding, get even more paid out, and keep doing that over and over. And I know then eventually I'll get put in a slump. My girlfriend had also said something today, right? If you're winning all the time, if your chart is just boom, 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 eventually you're going to hit a very hard point, right? You're going to crash. You're going to have a tough loss, and it is what it is. I would rather my chart looks like this, just over and over, where you have a really good streak, 1 bad streak, really good streak, 1 bad streak, good streak, bad streak, right? I wouldn't want my chart to just be only good. I wouldn't want it to just be only up, because then when you do go in that bad streak, your bad streak is probably not going to be the best looking. It's probably going to be, oh, I lost again. Oh my God, I lost again. Oh my God, my accounts are gone. Oh my God, I can't pass an account. Oh my God, oh my God, oh my God. And then you're back to where you started, even though you had a really good run. I would rather it be have a good run, learn from my losses, have a good run, learn from my losses, have a good run, learn from my losses, rather than just losing and being like, oh my God, I don't know how to do this and that. I would rather my chart look like this than look like this. And that's how a lot of you guys should think. You should learn from your losses. Don't let your losses get to you. Understand that a loss is part of the game, right? If you guys have seen, I don't know if you guys watch PB Trading, Patrick and Blake, right? I'm sure a lot of you guys know them, but they just released a new series. It's actually really sick. They take traders in, and they're doing an in-person boot camp, which I would love to do that eventually one day. But they said something that really stuck with me, saying, okay, if you take an A+ setup every single day, then eventually that system, you are bound to lose a setup eventually. Obviously, you could be very well off. You could literally win 100% of your trades for a long time. But then eventually, your system, if it's most people have, most of your influencers you follow probably have anywhere from a 60 to 90% win rate, right? I would say my win rate's gone down heavily this month. I would say I'm looking at a 70% win rate, and I've been at a 94% win rate. I've had an insane win rate for a couple months straight, and it just is what it is, right? But if you're taking all your A+ setups, you cannot let that losing streak get to you, because your losing streak or your model might account for 4 losses in a row. It might account for all those things to happen, right? And when those things happen, you cannot not take a setup. You have to just be driven in your mind. When I see my setup, I'm going to take it, because your model, it could account for 4 losses in a row. But then if you take that same setup for 10 more trades, your model could then also account for 10 winning trades straight out of that 4 losses. And that's kind of just what comes with trading and understanding a model and understanding a win rate. Is you're not always going to win, But if you have a winning model, especially a high win rate model, and you need to take all the setups that perform themselves, because eventually they're all going to play out how you want them to. Especially, if you have a 90% win rate, you're guaranteed to be profitable. It's just about how you act. Because I could very easily say, okay, I've lost 4 trades. Okay, you know what? I need to be taking a lot better setups. But at the end of the day, all these setups that I've been taking are my model. They're all my exact model. And people come in my TikTok chat, they come in my chat and they're like, bro, what are you taking? Like, that's a terrible setup, like this and that. But then when I win on those setups, they're like, oh, great trade, this and that. And it's literally just because those are outcome-driven people. They're not process-driven people. People who understand the process, understand you need to be taking the setups when they're the actual setup. Yes, they might not look good because now you're down in money, but in the other side of things, they look amazing when you're up in money, right? So you need to be in the middle ground. You just need to know the setup is there for the setup, and it's part of the process, and whatever the outcome is the outcome. It doesn't matter if I'm up, it doesn't matter if I'm down. If I took the setup that I was supposed to take that day, that's all you have to be content with. Don't be content with the numbers on the screen. Be content with the process. The process is all that freaking matters. If you take the trades when you're supposed to, then you'll become a very good trader very fast, just because you're now a process-driven person rather than an outcome-driven person. That was a good little rant there, but I think a lot of you guys needed to hear that, especially if you guys are maybe doubting my system, or if you're even doubting yourself within trading. It's all part of the system, and it's all part about learning and going about the process. And obviously, I should have been a little, last week, right? I'm kind of pissed because I was low-key sleep deprived like the whole week. Kind of screwed myself a little bit, but I'm not blaming my outside actions on my trading. At the end of the day, when I come in on trading, it doesn't matter. I'm still taking the same exact setups depending on whatever I'm in my life or wherever I'm in health-wise. It's still the same exact setup. It's still the same exact thing every single day, and it's not based on the other. I can make excuses all I want. I can be like, oh, I was sleep deprived though. I didn't do this, I didn't do that. But at the end of the day, I'm still taking the same exact setups. It's just because the market wasn't giving me what I needed to. And because of that, I haven't had the best results. But it's just part of the process. And that's literally all I can leave you with, is losing is part of the process, and so is freaking winning. And that's the best part about it all, right? You're going to go through those losses, but then when you come out on top, it's going to be the best feeling you've ever felt in your life. And it's something to really look back on and be like, yeah, I did that. Nobody else did that. That's all you. And there's nothing better than that feeling. I cannot lie to you guys. Little rant right there, but I hope one of those sentences out of all those sentences clicked with you. I hope something in there, you'll leave this call and be like, damn, okay, I think I see what Andrew's talking about, especially when you go back test. I always tell everyone in the bootcamp V1, eventually we'll get into homework where you guys are back testing every single day. But when you're back testing, right, your model doesn't, like my model specifically, does not account for me to take a losing trade and then trade more that session. Whenever you're back testing, I know Big Racks Jay, right, we were just talking earlier, but he was saying when he back tests, what he does is he takes a trade, whatever the outcome is of the trade, he then goes on to the next session, and then takes a trade there. Never once in that backtesting session does Big Racks Jay, does he take a trade and then take another trade because he lost, and then take another trade while he's backtesting. So if your results from backtesting are showing, okay, this is exactly what I need to do, I just need to take one trade, move on to the next day, and keep going like that, why would it ever make sense for when you're trading in the real markets to take a trade, lose a trade, and then try and trade again? Now you've completely skewed your results. You're not doing what you're supposed to be doing, and now your model is not even in play. That's all intuition. That's all you kind of just coming in and trying to do, like forcing things, honestly, right? If your model says one trade a day equals a 65 to 70% win rate, and you're profitable and you're making money, that's all you need to know. The numbers on the screen are telling you what to do, how it's going to do it, and how it's going to work. All you have to do is go out and execute. You don't have to sit there and force things. You just have to understand, okay, if my model in back testing shows me that I'm profitable, shows me that I'm winning, I just need to go out, take that one trade per day, whatever the outcome is, I move on to the next day, and that is just part of the process. And that's exactly what you guys see me do every day, right? For the past week and a half, you guys have seen me take losses, but I've never sat there in those losses and then taken another trade. It's different if you have evals to trade on. Like, for example, I took a loss today, but then I traded on my evals accounts, and now those evals are passed. Luckily, it's pretty nice, but I didn't sit there and trade my Apex accounts. I didn't sit there and trade my funded accounts. I sat there, took my loss, knowing that I'll then come on to the next day and trade those funded accounts and not trade today. with the accounts that I already have, right? It's just move on to the next day, use the model, use the process, and eventually the results will come. And I guarantee you, if you're not seeing results, if you've been backtesting, you have results in backtesting, but you can't see results in trading, I guarantee if I looked at all your executions and you have multiple executions per day, that is exactly why you're unprofitable. You're not doing what your backtesting sessions account for, and therefore your model's never going to be able to play out properly because you're just messing up your system, messing up your process, and that is why you're probably unprofitable. If you can consistently make money in backtesting, you consistently have a high win rate in backtesting, you consistently see results, but you're still like, bro, what am I doing wrong? Guarantee you're over trading, you're not doing what you're doing in back testing, and that is why you're screwing yourself over. Y'all got any questions on that or anything? That was a good little rant for you guys, but I think a lot of you guys probably needed to hear this. Maybe you're a beginner and you're still paper trading, so you're like, bro, what is this dude even yapping about? But if you've been trading in the markets, I'm sure you've been through a lot of the experiences I just explained, and hopefully you can learn from this and move forward with your trading and kind of understand things on a deeper level now. But just to touch on one more thing, though, I find it so funny. This is another thing I want to talk about. Coming into the market, right? A lot of people have a bias when they come into the market. I find it so funny. Like my TikTok chat's always like, bro, what's your bias on the day? Obviously, I have a bias, right? But being a really good trader is about reacting to the market, right? Okay, so if we have two highs, right? We have this and this. Okay, yes, I could be like, okay, I probably think we'll go to this high. But say we come in here, start chopping around, we have a gap here, we completely disrespect that gap. I could say, okay, I do believe, yes, and this may be my bias on the day, but I do believe it's more probable that we're going to hit this gap first, and then from there, I think I'll take a trade. I think it's more probable if the momentum is showing here, if everything is showing here, then I'm going to take the trade to here, even though I want it to go here, right? Or if you want to be extra precautious, you could say, okay, I still have this as a bias, but I know it's going to hit this. So if it hits this, then I want to see react off this. And if we get a move to here, then I'll take this move within here. But if not, it is what it is, right? Then I'll just let it hit here, keep trickling down. I just won't take a trade today. Or you can be on the other side of things where I wouldn't say it's rushing, but you can still try and catch the trade in here. You can still try and catch this trade when it starts plowing down here. You can still try and catch this knowing that it's going to come here. It's a little intuition, but you don't have to have a set bias on the day. I think a lot of you guys get screwed over because then, okay, say you have a set bias here, right? And you're like, oh, this was a liquidity sweep. I'm going to enter the trade as soon as it then pushes through this gap and boom, we're trading here. But in reality, maybe there's another gap up here. And now just because you had this strong, strict bias, you just screwed yourself over trying to enter a trade here when in reality, the actual trade was going here. But just because you had that set mindset and you had that kind of biased mindset, you couldn't see the market for what it was. And now you just screwed yourself over because you kind of just tried to force this, but in reality, the market was showing down the whole time. And because you had that bias, you tried to force something, and now the market's gone against your favor. I think a lot of you guys should be reactionary with the market instead of trying to force the market. And then speaking on top of that, right, a lot of these TikTok dudes, right, they don't understand the process. As I was explaining before, right, it's so funny seeing the difference in my chats when I take a winning trade and people are like, yo, that was a great setup, this and that. That was amazing. They don't have anything negative to say. They see the green on the screen. They're like, yeah, let's go, dude. That was great. Then they see red on the screen. They're like, bro, what are you doing? Oh, my God, I can't believe you took that. Your bias was so wrong, this and that, right? And they just don't understand. The TikTok dudes cannot fathom that you take losing trades. They literally cannot. Like, even though I already know they probably have 50 executions on their screen, they're probably down, they probably lost their funding account or maybe blew their eval that day, and they're coming into my chat talking about how I did something wrong, this and that, when in reality, it's part of the process. Like, I literally cannot explain it anymore. Losing is all part of it, and you just have to, you literally just have to eat them. You just have to eat those losses, take it to the chin, and move forward, and that's how you're going to be a good trader. You don't let it get to you, because people think trading's all sunshine and rainbows. Obviously, I know a couple dudes who have really high win rates, who win a lot and don't lose too often, but I mean, that's just, some people are just different, and it's very true. Like, I'm coming up on 2 years into trading, right? A lot of these dudes that have been trading, they've been trading for like 4 years, 5 years, And yeah, I would assume when I'm 4 years into trading, my win rate will get even better. I probably won't lose as much, and I'll keep becoming an even better trader. But as of now, I understand what a lot of other people don't understand, right? There are people that have been trading for 2 years that haven't made a single dollar from trading. And I think that's what makes me so much different is, right, I understand that losses are completely normal. I'm not a beginner, but I'm not super advanced in trading. I do understand the concepts very well. I would say I am like slightly advanced. And I would say I'm a lot like more ahead of people who are coming up on 2 years within trading, but I still understand that trading's a process. I understand that you're not going to see green all the time. You're not going to see red all the time as well too, right? Like I understand I see a lot of red right now, but I know on the other side of the fence there's a lot of green to be made, and there's a lot of things that I can still do to be even better at trading, and still see the results that I want to see, right? All these people that are in my chat that are like, bro, what are you doing? When they see a green day, they're all happy, but then when they see a red day, they want to come in and hate. But they don't. Those are the people that just don't understand the process, that trading is just, you just have to keep going forward. Whether you lose or win, you have to go the next day, perform the same exact setup that you did this day before, and whatever the result is the result, and there's nothing you can do about it. And that's kind of what trading is, right? People think that they can force things, they think that they can do this, do that, but in reality, the market's going to do whatever it wants to do. So if you have an edge, you just need to take that edge every single day, every single time it forms, and move forward with whatever the market wants to do from there. And I think that's what unprofitable people just don't understand. They think that they can just force everything. They think that they just can call every single move. And I think that's also what comes with people like top ticking and bottom ticking, kind of skewed. Like what looks like an action, like top ticking and bottom ticking is not the only thing to trading, right? There's a lot of other ways to trade. There's a lot of other ways to go about trading. I think with all these people top ticking and bottom ticking, it's kind of put this mindset into people that if you don't catch the move at the bottom of the range, then you're not a good trader. But in reality, if you have a profitable system, you have a high win rate, you're still a very good trader. It just may not look as fancy as what everyone else is doing. And I think that's kind of just what all of the TikTok and everyone has kind of been skewed to, right? They think you need to hit these crazy wins. They think you need to do this and do that. But when it comes to it and you're consistently winning with a smaller win, you're going to make more money than those people who are trying to bottom tick, top tick, and then they lose once and they're like, all right, I need to go in again. And then they lose again until they have no account. Versus on my side, I take smaller wins, but those wins start to stack really fast, especially once you kind of get in that groove of things and get very good at trading. And then also, since I know I take small wins, I don't let a loss get to me. I take the loss, I eat it, and I move forward to the next day because I know that I can make all that money back and some if I just keep moving forward. And that's what I'm super excited for. I think this week is still going to be really good. I'm not worried about the loss today because, as I said, I've taken 4 losses technically in a row, but not really. I know if I then take 4 wins in a row, I'll be in a better position than I was when I started losing 4 times, right? I'll literally be up money when I was losing 4 times if I win 4 times in a row. So that's what kind of brings me clarity, and that's what I hope you guys can understand too, that every time you lose, as long as you don't lose more on that day and you just move on to the next day, you can make back all that money in the next day. I think people just try and force things. They try and get that payout, or they try and do things by a certain date. If you just literally let it be and you understand, okay, I lost today, I can come in tomorrow and literally be back more than what I was the day before that, then that's all you need to know. But with that being said, I hope that clears some things up for you guys. If you guys have any questions, please let me know. But if not, that'll be the end of my yap session, basically. As I said, today was a pretty informative day. I was glad I was able to go over things that I missed on Friday. Again, on Friday, I had to go on a road trip to my girlfriend's house, so is what it is, but we got it all in today. Everything I wanted to speak on, we got it in today. Gaps, I'm glad we went over those. And then tomorrow, put your big boy pants on, because we will be going further into gaps, and we will be going further into that playbook that I showed you guys, and we'll really kind of get to understand what gaps are, how to use them so far, and kind of like how to really push through those gaps and understand price for what it is. And I guarantee after we go over the inverse fair value gaps tomorrow, you could literally just take the concepts that I've taught you, the most basic concepts, and be a very freaking good trader. But we're going to still dive even deeper from that point and get even deeper into trading, even deeper into the concepts, so you can keep stacking these concepts. As I said, like math class, you keep stacking these skills to where you're going to be a very good mathematician or trader, and you're going to be able to be just very good in what you do, and find a lot of success. Oh, you gotta get the premium subscription? Dang, they must have changed it because before you could just buy it straight up, but yeah, that kind of sucks, MNDZ, damn. But with that being said, y'all got any more questions or anything? Hold on, let me see right now, MNDZ, let's see. Home. No, it's probably in settings, let's see. Where would this be? Settings and billing. Alright, right here, real-time data. If you go to subscription, I'm sure if you don't have any, then you click explore now. And you should be able to find them. Let me know if that's an option for you. Oh, I found it was the order confirmation notification. Interesting. Yeah, I mean, it's been literally like 2 years almost since I've looked into that, so I don't really remember too much, and I'm sure TradeAway has updated multiple times since then too. So, all right, Scott, you have a good one, brother. Yeah, just click on that link and see where it takes you. If you gotta get premium, that just is what it is. But there are other charting platforms. Like, you don't need to use TradingView. You could use TradeAway while having TradingView, and it's real time, I'm pretty sure, but I'm not 100% sure. Deuces, Mike. Have a good one, bro. Okay, there we go. So yeah, maybe you do gotta get premium. It's kind of annoying. Yeah, just click that. You should be good. Damn, that sucks. TradingView's up in the prices, bro. That's annoying. Yeah, TradeAway should have free charting. But you might have to like paper trade those still on TradingView. All right, with that being said, I gotta head out, boys. MNDZ, if you got any more questions, just text me on the side or text in the group, and someone will be able to help you. But I hope you guys enjoyed that, and I will see you guys tomorrow morning. I'm calling it right now. The win streak has begun. I am so serious. If whatever happens tomorrow, but I'm telling you right now, the win streak has begun, and I'm going to end this week 4 for 4. You guys have my word on that, but again, it is what it is. Whatever happens, happens. You guys know that. So that being said, I will see you guys tomorrow, and hope you guys have a good rest of your day. Deuces, everyone.